the stack is such that you can use, simple Web2 APIs. You don't need any blockchain engineers, and with a couple of people, you can put together like a very sophisticated product with much more functionality and go live in like weeks.
What do you think is going to be the biggest 0 to 1 that still is yet to happen, that can happen, and you will try to make happen over the next 1, 3, 5 years?
Welcome back to The Roll Up.
This is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy it.
Mr. Rodri Fernandez on Crossmint. Guys, I'm super stoked. We've been trying to get Rodri booked for a while. And man, we were just saying everyone wants stablecoins these days. You just got back from Money 2020. That's a little bit more of like it's not necessarily a crypto native conference. It's a bit more of a fintech conference broadly. What were your takeaways? What did you hear about the sentiment around stablecoins while you were at Money 2020?
So you're right that it's a traditional fintech conference, but honestly, this time to me it felt like a crypto conference because everyone is thinking about stablecoins. The audience primarily of the conference is traditional payment infrastructure companies, banks, and so on. And the main takeaway is that every single one of them pretty much is thinking about stablecoins, and those who don't, they're feeling an insane amount of FOMO right now, and they're rushing to get one of the door. And I think there is honestly a very big risk that those who don't will be pretty much left behind with products that aren't competitive anymore. And so it's a really fascinating time. I think the use cases 3 years ago of crypto were like very different to the ones today. Today it's mostly B2B, money movement, remittances, payroll, and so on. And it's really cool to see them all come to life after, so many years of all of us working hard towards them materializing.
Dude, I mean, it's incredible. You have worked with and partnered with so many great companies. We'll get into some of that. This segment is sponsored and powered by Polygon. It's the Money Moves Fast segment. Polygon has all kinds of stable coins, payments. I think they're the #1 leader in payments right now for especially non-US based transactions. They've got tons of adoption happening in Latin America as well as in Asia and Europe. And so I'm curious because Crossmint has partnered with MoneyGram as of recently. MoneyGram is typically someone that moves money, but not quickly, right? And so on this segment, Money Moves Fast, I'm curious to learn about how you've upgraded MoneyGram's technology and infrastructure so that cross-border remittances are now able to be done quickly. How were you able to make MoneyGrams move fast?
So the historical flow of remittances for these type of companies like MoneyGram is you go to a store, you give cash, and then that cash moves through SWIFT and a network of corresponding banks. And depending on what is the exact corridor, it takes quite a bit of time and money for the money to get there. And then the recipient, they also go to a physical location and they pick up the cash. The system, was built like quite a few years ago. And today, thanks to stablecoins, you can do something that is radically much better. And so the new flow with MoneyGram is you pay in whichever way you want. You can pay in person too, or via an app. That money is converted into stablecoins. It's moved instantly to the destination into a wallet that is created for the recipient in the new MoneyGram app. And now the recipient, doesn't matter where they're in the world, they can access dollars. Many people in emerging markets, they're completely excluded from financial services. They're stuck with currencies that devaluate and suffer from pretty deep inflation, which means that it's very difficult for them to save and build like a prosper economic life. And so now anyone, anywhere in the world can access dollars. They can access other type of services like yield on those savings, eventually trading in a few other things. And then they have the optionality to off-ramp back into cash through a physical location as they were doing before, or keep it as dollars and use it to do peer-to-peer payments buy services, and so on and so forth. And so we're seeing like, cross-border payments is basically one of the use cases that have had the highest product market fit. And similar to MoneyGram, like now, so many other remittance companies are announcing things, but it's really cool to see MoneyGram be a pioneer, a company that is, about 100 years old, and be able to build this in 2 months, basically. We went from signing contract to 2 months after, then being able to have a product lab in production with 2 engineers from their side. And so I think it will be a case study for the books, that people will be looking at one of the most incredible transformations in the history of finance, taking, and it's really cool. The team there is absolutely amazing. They're moving so fast, and they're trying to build a stablecoin first company, which is, we should get them guys into the podcast.
We should, absolutely. Would love to have them on the show. And they've been around for so long. They're so deeply entrenched in people's minds as the go-to place to do some of these remittances around the world. And they sort of just flipped the switch. I'm curious, why did they flip the switch? We get incremental improvements, as technology advances. Why haven't they done this before? Why did they choose to do this now with Crossmint?
So MoneyGram had a few stablecoin related products before. The main one allowed people to send stablecoins to MoneyGram and then off-ramp those funds via physical locations. So basically, they're opening up their liquidity network and physical network of agents to any wallet who wants to do that. But they hadn't truly mastered this embedded wallet experience. Part of the reason I think that is that historically the UX of wallets was not fantastic. And so, whether it's passphrases or, security risk or all of these annoying transaction pop-ups. And right now the tech stack has evolved so much that it's possible to build non-custodial, global from day one applications with absolute zero complexity to the end user. To the end user, it just looks like a normal app. There's dollars in there. It's fast. It's secure. It just happens to be cheaper and money arrives faster than otherwise is good. And so that's probably it. And then there's obviously developer infrastructure. Historically, it was pretty complicated. If you wanted to build something like this, you needed to orchestrate 10 different providers. You need the stable orchestration and the on and off ramps. You need the wallet infrastructure. You need RPCs, data APIs, anti-money laundering, travel rule. And so if you're an enterprise and you have to onboard 10 different vendors to be able to build this solution, the project is dead from day one. So right now, the stack is such that you can use, simple Web2 APIs. You don't need any blockchain engineers. And, with a couple of people, you can put together a very sophisticated product with much more functionality and go live in weeks. And then obviously blockchains like Polygon, now it's possible to transact faster, cheaper, and much higher throughput. That before it was very difficult to support enterprise rate and scale type of applications. And now you can. And I think, you've seen massive amounts of spikes of activity, things like the Trump meme coin and so on. It's supporting throughputs sometimes even higher than what Visa and MasterCard do. So it's very exciting time.
Yeah, it certainly is. And we're seeing more and more robustness and more volume taking place on Polygon as well as around Ethereum and other chains as well. It was $500 million that was moving on Polygon the other day. And this is facilitated by enterprise-grade security as well as high throughput, like you said, to support remittances, which requires a lot of bandwidth, a lot of throughput, a lot of transactions on a short amount of time. And the network can get very congested if it's not built properly. When it comes to MoneyGram, lots of transactions, lots of throughput, and they've been, they've sort of gone through some of the evolutions. The last question I have about MoneyGram is, again, why, they have the ability to upgrade, their technology on a pretty consistent basis. And in this way, they, have digital dollars now. They have this application and this wallet. Why do you think they jumped all the way to stablecoins? Why didn't they utilize the existing, Swift banking system, kind of allow people to, send money digitally first? And now they've jumped all the way to stablecoins. Was it sort of an incremental approach, or did they go all the way from like physical cash, physical store, all the way to stable coins? Like you said, 2 months, and it only took 2 engineers.
Yeah, I mean, to me, is that trying to build this with fiat rails is like getting a horse that is slightly better, and doing it on stable coins is like getting a Formula One.
Yeah.
And so why, like in terms of like performance, but then also in terms of like difficulty to build, is that it's so much easier to build these products now with stable coins. You have all of the regulatory arbitrage. You can build non-custodial wallets that are live anywhere in the world from day one without having to worry about all of the different local compliance requirements and different local providers, because there's no one who can give you embedded financial services all over the world. That's just for holding balances. Then you have like money movement. Obviously, it's just like impossible to build anything remotely as high performant, as fast, as cost efficient as moving money with stablecoins. And then there's the composability aspect too. Once you have stablecoin accounts for your users, then you can plug in all sort of financial services on top without needing to do all of these complicated integrations and have all of these different providers. You can provide yield natively to your users. Just because there's money being held in the account, that's already put at work in bonds that generate yield that you can either keep as a provider or give back to your users. You can add things like trading of tokenized stocks. You can allow someone that is in, say, Colombia or South Africa to be able to buy Tesla stock or OpenAI stock. You can give basically very sophisticated financial products that otherwise are, number one, just impossible to access to a lot of these consumers, and number two, do that faster, cheaper, and compliantly. And that's why I think like all of these fintechs are jumping on board now, because it's just like so much radically better technology that is about to eat finance and payments.
Man, it's incredible. You were named, Crossmint was named as one of the top 100 fintech companies of 2025. Congratulations. It's an incredible achievement. And there's other stablecoin providers on there, but generally what we're seeing is that stablecoins as a category is increasing. Crypto payments infrastructure as a category is increasing. You were up there with the likes of BVNK and Redot Pay, Rain, Transact, all of these guys. BVNK is in discussions to potentially get acquired for $2 billion. How do you think this is going to progress and evolve as crypto payments infrastructure becomes one with the best of the best in fintech? These two worlds were very, very separate for a long time. Money 2020, like you said, was almost felt like a crypto conference this year. How do you think these two worlds will converge when ultimately this just becomes, it's not DeFi and TradFi, it's just finance, right? It's not, these two worlds aren't separate anymore. They ultimately become combined. How do you think things will look different? Will they feel different? How do you think the UX might change? What do you think is going to be different as these two worlds converge?
Yeah. Number one, I would say for these two worlds to converge, there must be no differences in the UX whatsoever. For users, it doesn't matter if they're stable coins. What they care about is like, is my money safe? What fees am I paying to move it? What additional financial services I'm getting? And if those happen to be on stable coins, it's good for them. But they don't need to know. And that's I think like what we as a company aspire to do. We abstract all of that complexity for people on both sides. I'd say that, as you pointed out, there's not going to be like fintech apps and stablecoin apps that are separate as this separate category. There's just going to be like, fintech apps and stablecoins are just going to be another additional rail that is going to be added to the stack. For some things, at least temporarily, fiat may be better. If you want to send money from the US to Europe, for example, you don't really need to do stablecoins unless the money will stay in stablecoins on both sides at either side of the transaction. But over time, yes, I think over time, most volumes and most balances will be eventually held on some type of stablecoin balance. But in the short term, it's just going to be another rail, and it's just going to look for users exactly the same. And every single fintech company is going to have some type of stablecoin component, whether that is for like payments, whether that is for like account balances or other type of infrastructure.
The wait is over. The Talus testnet is live. Be part of the revolution. Join now at testnet.talus.network.
Relay, low fees, lightning speed, and the power of multi-chain at your fingertips. Instant multi-chain payments. Choose any token on any chain. 75 plus networks supported. More than 5 million users. 8 billion plus volume processed. 70 million plus transactions. Fast, reliable, everywhere. Start swapping today. Only on Relay.
Hibachi. Provable. Trade perps with speed and security. Earn rewards. Visit hibachi.xyz. Trading on fire.
Another thing that's happening is, right, we're scaling, we're integrating these systems, these wallet infrastructures. These companies already have massive distribution. And so now we're sort of integrating the technology at the base layer. I'm curious, how do you think this is going to scale? What comes next once we integrate stablecoins, crypto payments, wallet infrastructure into the back end of MoneyGram and WireX and all of these amazing partners that you guys have had? What comes? Oh, do we lose it? No. Okay, we're good. What comes next, right? As we get more and more integrated into some of the largest players with massive distribution, what are some of the other things that you guys are targeting as a business?
Yeah, for sure. So that is the first, I think, like angle through which to see it is like this battle between existing companies adapting stablecoins versus new entrants. Then you have sort of like what is the sequence of innovation and the different steps that are going to be happening over time. And something like today, most of the market is focused on like the very basics, right? Especially on the enterprise side. They're thinking like, okay, how can I launch a wallet? How can I allow users to have deposits? And how can I start to give yield and so on? Can I issue cards for users to spend the stablecoin balances? How can I allow these users to connect their wallet to a third-party site to be able to make the payment and bypass Visa, MasterCard, and get like better fees as a result? Over time, more sophisticated embedded financial services start to appear, right? Well, after the basics have been solved. And so there you start to have like like now, for example, because you have access to more data because of on-chain transaction activity, you have ways to do alternative credit scoring for giving loans to people, for example. Or you have the tokenization of the world. Basically, every single financial asset is getting tokenized. So you're going to start seeing these embedded trading services absolutely everywhere. You have prediction markets sort of like exploring right now, and you have the betting for like or information markets, I wish I think to in some other way to look at it, they start to also be embedded and trickle down everywhere. So basically, it's the full tokenization of the world finalization, and then that trickling down and getting embedded everywhere thanks to all of these composable assets and be made accessible to people all over the world. I predict that you will start to see much more dollarization of emerging markets, which will give a lot of opportunity to people. Will also probably create a lot of conflicts locally in some places because of the inability to do monetary policy, potentially spiraling down of like local currencies and things like that. And so that's also something to watch for that I think maybe people don't talk about so much.
Mm-hmm.
And then on the regulatory side, I think we're still a bit in like the Wild West, where there's a lot of companies who are doing things right, but there's also a lot of companies, especially more on the crypto native side, which are probably not spending enough time on the compliance and regulatory side. And I think that we all as an industry need a bit more professionalization.
Yeah.
I think probably over 80% of, especially the crypto native apps, are engaging in unlicensed money transmission because the way they're setting up their wallets. Mm-hmm. And I think that all of that needs to change.
Yeah. And I think further regulation as well as compliance with the existing laws, this is going to end up putting everyone on a even playing field, and builders such as yourself and Crossmint can help people become compliant by doing things the right way. I'm curious as I think about the business plan of you guys, and you're helping a lot of these companies. I'm curious, why did you decide not to go the stablecoin issuance route? I'm just looking at Tether achieving $10 billion in profit in 2025. Obviously not, you can't, there's only one Tether, right? They became the 17th largest US Treasury holder. You mentioned global dollarization that could have some polarizing effects, especially in emerging markets. How do you think about the stablecoin issuance game, and then all of the infrastructure that's built around the stablecoin issuers?
Yeah, that's a great question. So I think that you will have probably a small, pretty limited set of institutions who are issuers of like public stablecoins of sorts. By public or ecosystem stablecoin, I mean a stablecoins that is used outside of your own existing app. So think of like Circle with USDC, Tether, USDG, Western Union just announced their own stablecoin, and a few others. That only makes sense, I think, to a small set of users, because who's going to want to hold your stablecoin, right? Like the reality is, okay, if you're Apple, if you're Google, I think that game makes sense. For most companies, I think, and enterprises, what they care about is to get the yield while the funds is in the other ecosystem. So they have the optionality to decide whether they want to keep it or they want to give it away. And I think today the market is still a little bit like early, but probably what you will see is like, let's say I'm an app, a fintech app. As soon as funds hit those wallets, they're automatically turned into a stablecoin that is economically neutral to having my own stablecoin. And so what this means is that I get the yield anyway, but I don't have to go through the hassle of creating my own stablecoin and so on and so forth. And then when the money needs to get out, you swap it back into USDC or USDT or one of these other like typical ones. And so basically providers like us, what we're doing and enabling is like, if you're using a wallet infrastructure and the funds are held inside of those wallets, we're able to give you the yield one way or another. And then you don't have to worry about all of the complexity of using your own stablecoin. The stablecoin market is really big. Obviously, it had been on like before Tether existed that that was an option. That obviously is very appealing. It's probably the most efficient, capitally efficient company in the world.
Yeah.
But there's only one Tether, as you pointed out. So.
Yeah. Tether, Hyperliquid, and OnlyFans, right? Most efficient companies in the world. It's incredible. Yeah, man. I'm curious what you think is still missing. Like, it feels like we've come such a long way. I continue to look at things coming along the news wire, and it's every day. It's partnership, major bank, major fintech, major remittance payment provider. All of these are now coming into the crypto world. They're integrating the technology, and they're exposing stable coins to billions of people worldwide. What do you think is still missing? Is it regulatory? Is it technology? Is it engineering problems? Is it social coordination? What do you think is going to be the biggest 0 to 1 that still is yet to happen, that can happen, and you will try to make happen over the next 1, 3, 5 years?
So the main thing right now is, I think, adoption. So in time, like we're completely rewriting the entire financial system. There's like so many different stakeholders involved, organizations that are like pretty old, have their own ways. And so changing everything suddenly into stablecoins just takes time. And I think like things are moving as fast as they can be. Like literally every other day, you have one of these major financial institutions announce something new. And so I think that we're in an amazing track, and like in 1-2 years, we're going to look back and be like, damn, like a year ago, no one was thinking about stablecoins. Now everyone is building, and the next year is going to be about deployment. And all of these announcements that are getting out, getting them actually live, getting them be used by users. One of the main things I think about stablecoins is that they're extremely efficient. I think like cross-border, and they're also extremely efficient when the funds stay on stablecoins before and after. And so I think like for that to truly manifest itself, what we need is like more merchant acceptance of stablecoins, more consumer adoption, so that day-to-day payments start to go more into stablecoins. And then internationally, there also needs to be a bit more regulatory clarity on like which regimes and jurisdictions will apply to, or regulations will apply to each specific jurisdiction. But all in all, I think we're like an amazing track. The world is like changing at a speed that is unprecedented. And now it's going to be accelerated even further with AI agents. AI agents today, they have become absolutely amazing at writing code, doing research and so on, but they're not economic actors. They will become economic actors. They will start intermediating most economic activity. And when they do that, stablecoins are a much better primitive to do so than traditional financial rails, which just simply do not work for agents. And when that happens, then you're combining the speed of transformation of crypto and AI, which is like a atomic bomb. And so I'm very excited for that to happen in the next year.
Yeah. I had a conversation with Eric from Coinbase, who was the creator of X402, the standard that allows agents to pay one another. And he was describing how this opens the ability for agents to coordinate with other agents for pieces of work and make purchases for that work. For instance, we right now need a human in the loop for the ability to call an API, because we need an API key, and most of the time it requires purchase. And so X402 allows us to use stable coins to pay for some of the things that AI agents can go and use to continuing their work without requiring a human to step in and intervene and make that purchase. I'm curious how you think the AI agent economy will evolve, because it feels like, we're kind of on this path where we're headed towards agents interacting with one another on a very recurring basis, using a lot of transactions to process payments with one another and pay for work and pay for subscriptions and API keys and all these things. And maybe they'll even prompt us as humans to provide something that they can go and do. So how do you think the agent economy, the machine-to-machine economy, is going to evolve? How do you think that, they're going to use stable coins, that these agents are going to use stable coins? Why is that good for the economy, for agents to have more efficient payment methods and for agents to use stable coins to transact between each other?
Yeah, there's a lot to unpack there. So maybe let me start by saying where the market is today, and then from there expand to where I think maybe it's going and what are the main use cases. So today, I think you see two main applications. The first one is agentic commerce, and so this is you're talking to an agent, and either you being present or autonomously, the agent go and makes purchases on your behalf. So think of, I want to fly to Money 2020 Europe in 4 months, monitor prices. If it drops out that these prices, buys it for me. You don't have to go through the hassle. Then change my seat, ask for a refund, whatever. And so that is like that cluster of agentic commerce, which applies both to purchases of physical goods or services, as well as like API consumption, which is what X402 has been doing a lot of. The second cluster of activities were on agentic finance. So you could have like your own personal financial advisor that you ask to do trades and things like that. And the beauty there is like on anything, you can only do so much on the real estate of a website, right? You can maybe, let's say you're trading, right? Like you can make a market order, a limit order, it took a couple of things, but you cannot make like sophisticated requests for, let's say, monitor what this Twitter account is doing, and based on those outputs or inputs, make this thing, or copycat this other trade account, or whatever it is. You can just not do those things simply from the real estate and of a website. And now with LLMs, you can do anything you like. And so those I think are like sort of like the two use cases that we're seeing today. The market is relatively early, and all of the standards are getting developed. But there's products out there that people can use. Like we at Crossmint, the role we play on it is we provide simple APIs to build end-to-end agentic use cases. So everything from allowing agents to hold funds, to moving money, make payments, and so on. We have an API that allows an agent to buy billions of items from Amazon, Shopify, and so on, with stablecoins. Or if they want to, also with cards, we partner with like Visa and MasterCard for their new tokenization initiatives. And so this is live today. Anyone can go and they can use it, self-serve. But I think like for this to evolve, we need like, number one, better consumer trust, that if you're going to be making a request to an agent, that they don't go and do something stupid. And I think there's, especially when you do these things with stablecoins, you can embed programmable guardrails into the contract cryptographically that limit what the agent can do. Even if the AI was to hallucinate, they actually cannot do those things because it's programmed into the code that they're not able to do them. And so you probably will start seeing more like user present type of use cases, where let's say you're talking to the ChatGPT of the world and it's like, buy me a shoe. And you buy directly from there instead of being taken to the website and manually have to complete. And then from there, once more confidence starts to get built, they will start to see more autonomous use cases, especially for the use cases that are more painful today. So say like, buying a flight. And then over time, like confidence continue to get built and you see more. We use it internally. To give you an example of something very practical that we use today in the companies, we have a Slack bot that we programmed in like an hour that allows any employee to request the restocking of office supplies. It's like we're out of toilet paper, buy one. And it goes and it buys it from Amazon. And so we have a vault, we fund the agent with a little bit of money, and then we provided instructions as to how much and which type of items people can buy. And we say from having the office assistant reply 3 hours later, all the back and forth. It's so much more efficient. And so you will see now an explosion, I think, of like, especially a lot of B2B, probably procurement and some use cases, but also consumer, narrowly focused applications that I think are very exciting and very useful. From day one, you can build it in an afternoon.
Yeah. What is that tool called? Is that something you guys built yourself? Because I have a feeling others would definitely get some use out of it.
Yeah. Our intern built it in an hour with our own APIs.
Nice.
If anyone is interested in exploring use cases, happy to share guides and so on. Just DM me or whatever. You can actually do like drag and drop automations and connect, like similar to like Zapier. You can be like, okay, connect my payroll system to this, or let's say you have a Slack channel for like finance requests. It's like if a user requests, say, a card for like travel, if it meets these rules, then automatically disperse funds and provide like a card or whatever. You can do all of that today, and it's like really easy, like an hour. You don't need to know how to code. It's fascinating, but this hasn't trickled down yet into the world. I don't think people realize everything that is possible.
Right, and it's coming.
Blockchain shortcuts, templates, and widgets launch without friction for builders by builders. Visit enso.build. Asset management redefined, built on ERC 7621. Standardize how you launch, manage, and trade on-chain baskets. This is Alvara, the standard for on-chain asset management.
And so right now, those integrations do not use stablecoins, or do they use stablecoins?
Yeah, they use stablecoins. The problem with Fiat, I think, that exists, and we're trying to help solve and working closely with like Visa and MasterCard for that. But I think is that the entire payment stack, the entire financial system was built to prevent automated usage, because automated usage is usually fraud. Right. Usually people using stolen credit cards to buy things. And the downside of chargebacks is too big that you don't want to open the gates. Right. And so if you're, let's say, trying to use an agent to buy something on a website, you get stuck with like the, anti-bot, like Cloudflare protections. You're stuck with like reCAPTCHAs. You're stuck with like, let's say the agent makes a purchase and then the user doesn't like it and they get a chargeback. Who's responsible? Is it the user? Is it the agent developer? Is it the merchant? And if chargeback spike, then the costs trickle down across everyone, from the issuing bank of the card to the e-commerce site and so on. And so you have basically 10 different providers on each single website that all they do is try to prevent like fraudulent card purchases. And now, instead of that, you can just have a simple API that you just call and bypasses that entire financial system that we think is going to take too long to evolve to actually settle with the merchant. And that, I think it's live today, is really fascinating. And I think, again, like similar, you see both in parallel. You see like people, including us, trying to build stablecoin solutions, while also all of us try to make the existing system adapt. And we'll see which solution matters. For us, we're agnostic. We don't care. We're powering sort of like both flows, and letting the market and time decide what flow actually becomes better over time.
Absolutely. Well, you guys are doing a great job, obviously, and clearly through the partner channels that you have built. MoneyGram, WireX, they're facilitating billions of dollars on a recurring basis. These are some of the biggest fintechs and payment providers in the world, and you are the one to integrate Crossmint into their platform. So congrats on all the success. Keep up the great work. It's absolutely incredible. Thank you so much for coming on the show and helping us understand and navigate the world of stablecoins. This is the stablecoin super cycle, and money moves fast. So thank you so much.
See you.
Cheers, man. Talk to you soon.
Cheers.
Bye.